following is a sponsored program paid for by First Alliance Credit Union. Welcome to Good Money Moves, featuring Jenna Taubel from First Alliance Credit Union and Andy Brownell. Here's Andy Brownell on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
Good morning. It's time for Good Money Moves. I'm Andy Brownell, and I'm joined by Jenna Taubel, the Director of Brand and Digital Member Experience at First Alliance Credit Union. Hi, Jenna.
Hey, Andy.
So last couple of weeks, we've been talking about financial steps that you should be taking if you're earning good money, $100,000 a year, and even how to protect your family if you have over $250,000 in your account. So what Good Money Moves topics are we going to be talking about today?
Yeah, so we're going to kind of continue our conversation around deposits, but we're going to shift gears and talk a little bit more about a specific type of account that you can use to grow your savings and save your savings in, and that is a certificate of deposit, also known commonly as a CD. And really how to use those to help boost your savings, use them to your advantage, and talk more specifically about a strategy called CD laddering that you can use to really give your savings a boost. But before I dig too deep into CD ladders, I thought it would be good if we just touched on the basics of what a certificate of deposit is for those who may not be familiar with them. So in short, a certificate of deposit is a savings product that offers a better interest rate than your traditional savings account. And it offers this higher interest rate because with the CD, you're agreeing to leave your money in that account, and you're going to leave it alone from the time that you open it until the time that that account reaches maturity or comes to term.
Okay.
So so some checks and balances there, but the time that the CD reaches maturity, that usually ranges anywhere from as little as 6 months all the way up to 60 months or 5 years, right? And the longer the term, the longer amount of time that you keep the money in this account, the higher the interest rate is going to be that you receive for those funds. So basically what this all comes down to is you agree to leave your money alone for 6 months, 60 months, whatever that is. And in return, you get a better interest rate because you're agreeing to keep your money put and not move it.
Yeah, and I see from the financials point of view, they can extend the higher interest rate because it offers them stability in their asset portfolio.
Exactly. Financial institutions, it's a constant, check and balance between how much they have in deposits and how much they're loaning out. And of course, when you're talking banks, you start to talk about investments and stuff like that. But at the end of the day, you have to have deposits in order to loan money out.
Yeah.
It's kind of the gist of it.
The basics
so it's
of
important.
The system.
Yes. Yes. But really, when it comes to CDs, like the interest rate is great, but the flip side is that you can't then easily access your funds the same way you could if it was in, let's say, a normal savings account or a checking account or even a money market account for that matter, right? Those funds are really locked up. And if you do want to access those funds early, you'll be charged what's called a penalty fee. And that fee is usually a percentage of the amount of money you have in there. Some institutions just charge a flat fee. It varies from institution to institution. So if you're going to open one up, that's definitely an area to take a look at.
You do not want to convert them early because it's not going to be helpful.
It wipes out all of your interest that you could have earned. So when you kind of talk about it this way, you might end up feeling like you have to choose between getting that better interest rate or having more access to your money. And that's kind of a holdup for a lot of people when they consider a CD. But this is really where that CD ladder strategy that I just talked about can help you get that higher interest rate for your savings and your money and still give you access to your money, or at least part of it, at variables throughout the year.
Okay. Yeah, it had me a little confused at first because I thought we were talking about a ladder system that I could access my vast collection of CD music discs. Oh, no, wrong show. Okay. No, seriously, what exactly are you talking about when you say CD ladder?
Yeah, so a CD ladder is essentially nothing more than multiple CDs that you have, certificates of deposit. So the catch is that each one has a different term attached to them, or how long each CD will last, right? So some CDs have that shorter term like we talked about, so you can access your money faster, right? Those shorter terms, 6 months. Some you can even find shorter than that, 1 month, 3 months, a month, there's all the way up to those 60 months, right? So those shorter terms, you can have access to your money a lot faster. And then the other CDs that have a longer term, right? So you get that better interest rate. So think about it, they're similar to setting this up like rungs in a ladder, where the shorter term CDs are the lower rungs and the longer CDs are the higher rungs. So once a CD matures, you can choose whether to use that money if you need it for something, or you anticipate needing it for something, or you go ahead and create another CD in the form of another rung on the ladder.
Okay.
Am I following me?
I am, but okay, I'm going to let you keep going. But my question you might be covering it later, so that's why I'm afraid to ask. Do I make that a higher rung or to keep it a lower rung?
Yeah, so it depends on where. Yeah, it depends. And I will kind of cover that a little bit here in a minute.
Okay. So maybe just give us an example of what you're talking about.
Sure. So let's say you have $2,000 in your savings account, right? You've built up a nice emergency fund for yourself, for example. And you'd like to put it in a CD at First Alliance to get that higher interest rate, for example. So you have more than enough to cover the $500 minimum deposit requirement that we have for CDs. And you'd like to put your money in a 2-year CD, which has a very good interest rate, especially right now. You don't want to keep your money, all of that money tied up for 2 years, though. So what if you have an emergency that comes up at that time and you need that money? We talked about you don't want to have to pay the fee to get that out.
Right.
So this is where you start to think about creating that CD ladder. So the first CD will have, let's say, a 6-month term, and you only put $500 into that CD. So you also create a second CD with a 1-year term, and you'll put $500 into that one too.
Okay.
And then finally, you put the remaining $1,000 into a CD with a 2-year term. And this is a really simple CD ladder. You can make them as complicated or as simple as you want, but really it's about having kind of that structured term throughout the ladder. So, you can see that for the first year, you'll get access to your money every 6 months.
Right.
Essentially, that's right.
So I imagine every 6 months, I'm going to revisit my situation.
Correct.
And say, well, am I going to buy a car soon, or whatever it may be?
Mm-hmm. Exactly. And, it might, 6 months might seem like a long time, but it's a lot short. It goes by fast, and it's a lot shorter than having to wait the full 2 years to access the full $2,000, right? So you also have, half of your money in that 2-year CD so that you are getting that higher interest rate that you're looking for. So this is where it's about balancing access to your money with also having that good interest rate on that account. And this is really where that advantage of having a CD ladder in place is really, really beneficial.
So in essence, I want to maintain the ladder if I don't need access to the money. After 6 months in, if I look ahead and go, I'm good, there's nothing on the horizon, my strategy would be likely to purchase another 6-month CD.
Yeah, in this case, that would make sense, because you would have at 6 months, you would have your $500 coming up and open to you. And then in another 6 months, you'll have your 1 year. Well, you don't want to open up another 6 month necessarily, because
I might open
you would
1
have,
year.
Yeah, so you might want to bump it out to another year. So that way in 6 months, you'll have that 500, then another 6 months, you'll have another 500. And then in that 2 year, you'll open up that 1,000. And kind of throughout this too, you're still saving money regularly. So it might be where you can add maybe a little bit more to that new CD rung
No, I think
in the
I've got
ladder as you go. So yeah.
Yeah, because after that first 6 months, you're getting the advantage each time of the 1 year CD
Mhm.
rate, but having access every 6 months. And if you
Correct.
get out to the 2 years,
Mhm.
you might be able to buy another 2 year and still maintain the 6 month access points.
Exactly.
Oh, okay. Rungs in a ladder. Now it makes sense. Let's take a break, okay? We're talking about CDs and CD ladders today. Savings strategies to get a little bit more for bang for your buck, essentially. It's on Good Money Moves, and we'll be right back on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM.
Bye.
Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk 1340, KROC AM and 96.9 FM.
Welcome back to Good Money Moves. Jenna Taubel with First Alliance Credit Union with us, of course, this morning. And the topic is CD ladders, certificates of deposits, and arranging them in a way that maintains decent access to them, your money, while getting higher interest rates. So I guess if I'm interested in doing this, where do I start?
Yeah. Yeah. So the nice part about creating a CD ladder is that it's not hard, right? You just need to answer a few basic questions for yourself to really get started. So that first question is, how many CDs do you really want to open, or do you have the money to open, right? Because you have to think about that minimum deposit. Each CD is going to have, most of them are around $500. You can find sometimes they'll be $100. Sometimes they're even higher than that. So a lot of time, I mean, you can see some that are more like jumbo CDs where you need like a significant amount of money to open them. So just kind of pay attention to that when you're looking and when you're thinking about how many you want to open, right? Again,
it's division,
all
right?
yes, basic math. Again, all CDs have that minimum deposit requirement. The ones at First Alliance are that at that $500 level, for the most part. So, the number of CDs you can open is, of course, limited by your savings. So if you have $1,000 in your account, you can open 2 First Alliance CDs. If you have $5,000 in your account, you can open up to 10 CDs, right? So there's not a right or wrong number of CDs to have in your CD ladder. However, most commonly, CD ladders have about 5 CDs in them. So you might want to make that your first goal. Although, again, there's no right or wrong answer to this, right? The example I gave you before only had 3, and that it would be a step stool ladder,
Yep.
right?
So if I'm at First Alliance and I want to open up a 5-step ladder, I need $2,500.
Exactly.
Okay.
Minimum. Yep. So then the second question you really want to ask yourself is, how often do you want your money to be available to you? So, and we kind of covered this a little bit before in the episode here, but most financial institutions have CDs with terms that are in intervals of 6 months. So 6 months, 12 months, or that 1 year, 18 months, 24 months, et cetera, all the way up to 60 months is usually the highest they go. However, you can sometimes find other certificates of deposit that have a lot shorter or even some irregular terms to them, especially like we occasionally will offer CD specials and they'll have like an 11-month term or a 7-month term or something like that. You can find ways to work those into your ladder as well if they're available to you. But really, if you're just getting started, you probably want to stick with those traditional 6-month intervals because it's so easy to count out that 6 months and be consistent with that. And then, of course, you want to ask yourself how much money you want to put into each CD, right? You don't have to split it up, minimum across. Like the example I gave earlier in the show, you could do 500 in your first couple, do 1,000 in the bigger ones, or vice versa. You could reverse it too. But usually what you want to do is have the majority of your money in that longer term CD because you do get that higher interest rate on those. You want to really maximize your return on your investment in that way. However, you might have different priorities for your money, right? Maybe you want your money to be divided up completely equally. So that way, if an emergency arises, you consistently have access to that. You don't have to worry so much that you're not going to have what you need. Maybe you just don't feel comfortable with keeping a lot of money in a long-term CD. So you can really put most of your money in the shorter term CDs until you feel more comfortable with the strategy and working with CDs themselves. But really kind of once you've gone through and asked yourself these questions, at First Alliance, all you have to do is really fill out a form and a member advisor will get in touch with you to help you kind of complete the process of opening those CDs or a CD, or you can stop into a branch, right? So they're not difficult to open. And really the biggest challenge with this is just the planning part of it. So once you've really planned it out and done that, it's really easy to just open up a CD or multiple CDs and just have a plan in place and then let it play out.
Watch the money roll in. But you mentioned the longer term. If you laid this out correctly and you played it out long enough, you'd have all of it in 2-year CDs. They would just mature every 6 months.
Yeah, absolutely.
So you're going to get your top interest rate, but still have every 6 months access to a sizable chunk of your money.
Exactly. Yeah. It's a really interesting strategy. And again, you can get really complex with these. You can set them up there are people who have set them up so that they have money maturing every month. Just because they've opened, they've opened their original set, then a month later they come in and open a new set of 6 months.
Yep.
And, so every 6 months they're opening up a series of certificates so that they have money maturing and coming to them every month should they need it. So there are a lot of different ways to go about setting this up. Again, it just comes back to kind of your plan, what you think you might need that money for, how soon are you going to want to access it, what is your how comfortable are you with locking your money up for certain periods of time, how experienced of a saver are you? That can play into it as well. So
is this something I'd even ponder for my emergency fund, or I'm going to want my emergency fund in a place where I have ready access to it at a moment's notice?
So that's a great question. Yeah. So, and this is what I personally would be comfortable with. I would recommend keeping a small amount liquid. So in an account like an easy access savings, money market, checking account, something like that, where you do have that easy access on a moment's notice. But if you've done a really good job of building up that emergency fund, and let's say it's really just there in case you lose your job and you need to be able to pay your bills, that's where something like having that CD where the money's going to be coming to you in every 6 month increments, that is probably more doable to do in a CD ladder versus I need to make sure I have money in case my furnace dies or my car needs unexpected repairs or my kid breaks their leg and the insurance isn't going to cover it. That kind of stuff. Those type of emergencies, you definitely probably still want to have some liquid savings available to you. But once you've built up that emergency fund and that, you've got more than you would probably need for a single emergency, quick short-term emergency, then structuring that up with some of your emergency fund savings can be a really good strategy to continue to build that.
Makes sense. Okay, we're going to take another break and return. We're talking about CD ladders, strategy to earn more interest on your savings. With Jenna Taubel, First Alliance Credit Union, back in a moment on News Talk 1340, KROC AM and 96.9 FM.
Good Money Moves continues in moments with Andy Brownell and Jenna Taubel from First Alliance Credit Union. This is News Talk 1340, KROC AM and 96.9 FM. Good Money Moves with Andy Brownell and Jenna Taubel from First Alliance Credit Union on Rochester's News Talk, 1340 KROC AM and 96.9 FM.
Certificates of deposit and CD ladders are good money moves that we're talking about today. Jenna Taubel with First Alliance Credit Union with us. And Jenna, now that we've talked it through, it seems so simple now and compared to where we were about 15 minutes ago. Am I missing something? Is there something that's out there that I'm not considering with these CD ladders?
Well, maybe. There are definitely, several more advanced strategies out there that I kind of alluded to those before the break. And if you really want to dig into this more, there's a lot of online videos of people who have created some pretty complex CD ladders that have several like long-term CDs maturing at a rate of like one a month. However, really what comes down to is whatever strategy you come up with for yourself, all of them have one thing in common, and that really is that it's important to keep track of the time passing. Because, this means that you not only have to keep in mind when a CD will mature, you also need to keep track of how much time is left on the remaining CDs that you have as well. So if you think about it, in other words, if you open up a 1-year CD and you wait 6 months to open another one, that CD will mature at the same time as that 6-month CD you just opened. So then you end up having two maturing at the same time, which is why you need to kind of pay attention. Okay, well, if my 6-month just matured and I have my 12-month maturing in that I opened at the same time, we talked about this at the very start of the show, right? Then you need to actually open up another 12-month at that 6-month mark to make sure that you're getting it at that every 6-month interval. So kind of really taking some time to map that out a little bit, and then also figuring out, a lot of times CDs will have an auto renewal feature built into them. So when you go to open these CDs, just make sure that if you don't want that CD to auto renew to the same term, that you indicate that up front, so that you have some more control over what happens to that money. Now, if you want it to auto renew, that's fine too. You typically have a window of time in which to change that as the maturity date comes up. But if you want to make sure that you're really on top of what happens to that money, kind of opt out of that auto renew feature that comes with a lot of CDs.
Sure. Now, because it wouldn't make sense to have it auto renew to the same term, because then you're just overlapping again.
Exactly.
Okay.
Exactly. Yes. And I mean, you can really use this information in a couple different ways. You can set up several short-term CDs that mature each month, for instance, right? We kind of talked about that. Or from there, as CDs mature, you can open up a series of 12-month CDs so that you have several 12-month CDs that are maturing once a month per interval, right? So, but really, it's just there's not just one strategy that's going to be best, and there are so many different ways that you can go about setting up a CD ladder. Again, it can feel a little bit overwhelming, especially if you're just starting out or you're not super comfortable with how CDs work yet. I would not recommend jumping straight into a CD ladder if you've never had a CD before. Start with just opening up a short-term CD so you start to understand how they work, and you understand how the interest works and when you get paid out and those types of things before you jump into a more complex strategy like CD laddering. But, it is kind of exciting to know that you've got a strategy for your savings at this right time, especially if you kind of figure out just that right combination of CDs for yourself. And you don't have to kind of come up with this plan alone either. There's definitely calculators out there. You can use a spreadsheet. You can talk to one of our team members at First Alliance. They can help you structure some CDs in a ladder format so that you are meeting your financial goals too. So.
Excellent.
Yeah.
Fantastic information. And of course, there's a lot more out there. So, Jenna, where can we find more information?
Yeah, as always, I encourage our listeners to visit our website at firstalliancecu.com. You can subscribe to our blog. We release new financial tips and advice every week. You can go back and listen to past episodes of this show at firstalliancecu.com/podcast, or on KROCnews.com. You can also subscribe to Good Money Moves on Apple, Google, and Spotify podcasts. And of course, if you love our show, please take a minute to leave us a review on your favorite podcasting platform. And if you have any topics or questions that you would like covered on Good Money Moves, please send me an email at marketing@firstalliancecu.com. And of course, I strongly encourage you to reach out to our team at First Alliance Credit Union that they can help you start making good money moves today.
And ask them about CD ladders.
Yes.
At First Alliance Credit Union, federally insured by NCUA and an equal housing lender. Jenna Taubel, thanks again.
Absolutely.
And we'll chat again next week with more good money moves right here on News Talk 1340, KROC AM and 96.9